1. According to the CFA Institute Code of Ethics, a CFA charter holder must A. Always act in the best interest of the employer. B. Act with integrity, competence, diligence, and respect. C. Disclose all conflicts of interest only upon request. D. Prioritize firm revenue above client interests. 2. A CFA charter holder receives non-public material information from a friend at a publicly traded firm. The charter holder should A. Trade based on the information before the market reacts. B. Disclose the information to a select group of clients. C. Refrain from trading or disclosing the information. D. Confirm the information with another source before trading. (3) The geometric mean return for a portfolio with annual returns of 10%, -5%, and 15% over 3 years is closest to A. 6.5%. B. 6.3%. C. 5.8%. D. 5.5%. (4) In hypothesis testing, a type 1 error occurs when A. A false null hypothesis is rejected. B. A true null hypothesis is rejected. C. A false null hypothesis is not rejected. D. A true null hypothesis is not rejected. (5) If an economy is operating above its long-term potential output, the central bank is most likely to A. Increase the money supply. B. Reduce interest rates. C. Implement expansionary fiscal policy. D. Increase interest rates. (6) An increase in the expected inflation rate will most likely cause A. A decrease in nominal interest rates. B. A decrease in real interest rates. C. An increase in real interest rates. D. No change in interest rates. 7. Under IFRS, inventory is reported at A. The lower of cost or market. B. Historical cost. C. The lower of cost or net realizable value. D. Net realizable value. 8. A company using the straight-line depreciation method for financial reporting and accelerated depreciation for tax purposes will A. Report higher tax expenses in early years. B. Have a deferred tax liability. C. Have a deferred tax asset. D. Recognize tax expenses equally each year. 9. A company's weighted average cost of capital or WACC is most likely to increase if A. The proportion of debt financing increases. B. The corporate tax rate increases. C. The risk-free rate increases. D. The company's beta decreases. (10) The optimal capital budget is determined by A. The highest weighted projects by profitability. B. The point where marginal cost of capital equals the investment opportunity schedule. C. The lowest weighted projects by cost. D. The highest available retained earnings. (11) The primary benefit of diversification is A. Increased expected return. B. Reduced unsystematic risk. C. Increased systematic risk. D. Reduced correlation among all assets. (12) In the capital asset pricing model or CAPM, the market portfolio includes A. Only risk-free assets. B. Only equities. C. All risky assets weighted by market value. D. Stocks selected based on performance. (13) A high P/E ratio typically indicates A. A company with high earnings stability. B. A stock that is potentially overvalued. C. A stock that is undervalued. D. Low investor confidence. (14) A key difference between growth and value investing is A. Growth investors focus on dividends. B. Value investors seek stocks trading below intrinsic value. C. Value investing ignores financial fundamentals. D. Growth investing involves only large-cap stocks. (15) If a bond's coupon rate is higher than its yield to maturity, the bond is trading at A. A discount. B. A premium. C. Par value. D. Face value. (16) Duration measures a bond's sensitivity to A. Credit risk. B. Interest rate changes. C. Inflation changes. D. Liquidity risk. (17) A European call option's intrinsic value is determined by A. The time to expiration. B. The underlying price relative to the strike price. C. The risk-free rate. D. The option premium. (18) If an investor expects volatility to increase, they should A. Buy options. B. Sell options. C. Short the underlying asset. D. Reduce portfolio risk. (19) Compared to public markets, private equity investments are typically A. More liquid. B. Less volatile. C. More transparent. D. Subject to less risk. (20) A hedge fund using a long or short strategy aims to A. Hold only long positions. B. Reduce market exposure through offsetting trades. C. Invest exclusively in private companies. D. Avoid leverage. (21) A CFA charter holder who receives a gift from a client must A. Disclose it to their employer if it is significant. B. Always decline the gift. C. Accept it without disclosure if it does not influence objectivity. D. Only disclose it if requested by the employer. (22) If the correlation coefficient between two assets is -1, the combined portfolio will A. Have increased risk. B. Have zero risk under proper weighting. C. Have a correlation of 0. D. Be impossible to construct. CFA. The Chartered Financial Analyst or CFA designation is a globally recognized professional credential awarded by the CFA Institute to finance and investment professionals who demonstrate expertise in investment management, financial analysis, and ethical standards. The CFA program consists of 3 rigorous levels, covering topics such as ethics, quantitative methods, economics, financial reporting, corporate finance, equity and fixed income investments, derivatives, portfolio management, and alternative investments. Candidates must pass all 3 levels of exams, gain relevant work experience, and adhere to the CFA Institute's Code of Ethics and Standards of Professional Conduct. The CFA designation is highly regarded in the financial industry and is often pursued by professionals seeking careers in asset management, investment banking, portfolio management, risk analysis, and financial research. Here are 5 top beneficial uses of CFA. 1. Career advancement in finance. The CFA credential is highly respected in investment management, asset management, private equity, and hedge funds, helping professionals secure roles such as portfolio manager, financial analyst, and investment banker. 2. Global recognition and credibility. The CFA designation is recognized worldwide, making it valuable for finance professionals seeking opportunities in international markets or global financial institutions. 3. Expertise in investment analysis and portfolio management. The CFA program covers a comprehensive range of financial topics, equipping professionals with in-depth knowledge of financial analysis, valuation techniques, and risk management strategies. 4. Higher earning potential. CFA charter holders often earn higher salaries compared to non-charter holders, as the designation signals expertise, dedication, and ethical commitment, making them more attractive to employers. 5. Strong ethical and professional standards. CFA charter holders must adhere to the CFA Institute's strict code of ethics and standards of professional conduct, enhancing their reputation and trustworthiness in the financial industry.